Breaking news, the Bank of Canada leaving rates unchanged. Let's get some immediate reaction now from Benjamin Tal. He's the Deputy Chief Economist at CIBC, and he's standing by at the TSX. Benny, you heard some of the headlines we just read. What's your reaction?
I'm shocked. Well, not surprised whatsoever, yes. The Bank of Canada...
Shocked in a sarcastic way.
Yes, in a very sarcastic way.
Just for our listeners on radio.
No, not surprised whatsoever, absolutely. We have a situation in which the Bank of Canada is telling us we are not touching interest rates. And I think that all this positive news that they are highlighting basically are trying to convince people that the Bank of Canada is not going to cut interest rates anytime soon, because as you know, there is a bit of a trade that the Bank of Canada will cut interest rates the next move. So the Bank of Canada is telling you, listen, we are not touching interest rates when it comes to raising interest rates, but don't think that we're going to cut anytime soon. So I think that the purpose of highlighting, NAFTA and the good news in the first quarter is basically about telling the market that they are not going to cut anytime soon.
Yeah, it's not just NAFTA that they mention. It's not just the steel tariffs or the better than expected job growth. They also signal that the oil sector is beginning to recover as we've seen an increase in production and prices. They also talk specifically about the housing market. In fact, that indicators point to a more stable national market. So all of these touch points that we are worried about, whether it's domestic jobs growth, whether it's the trade uncertainty, whether it's the oil market, whether it's the housing market, they seem to have something positive to say about each of those things.
Yes, and the question is why is mentioning all those positives? First of all, because they have been very depressed until now, so you have to focus on some of the positive news. March numbers, GDP numbers were better than expected. Clearly, the oil market is stabilizing. And he's right, even the housing market is not in a free fall by any stretch of the imagination outside places like Vancouver. So yeah, there is a reason to be a bit optimistic here. But I think that the agenda is not about raising interest rates. It's not about I'm willing to continue raising interest rates at this point because things look great. Basically, the market was so depressed, so people were pricing in at one point very close to 50% probability of a rate cut. And the Bank of Canada said, not so fast. We are not cutting any interest rates anytime soon. Therefore, let's focus on the good news. But it's not enough to justify a rate increase anytime soon.
Benny, can I just dig a little deeper into China? Because obviously people who are watching the broader markets today see the uncertainty between China and the U.S. I'd love to know what ultimately that means from your perspective for the Canadian economy. And I would add to that, the Bank of Canada highlighting things like this uncertainty for Canada's canola exports to China. And earlier this morning, we had the CEO of Nutrien, and he's talking to farmers, and there was great concern about whether or not they're truly going to be able to continue exporting product to that market. How much of a wild card is the China story, do you think, for the Canadian economy?
It's a huge wild card because we are caught in a crossfire, and I was looking at so many scenarios. There is no one scenario in which we are winners. We are not gaining here. Clearly, this can be a global story if we have a full-scale trade war. And you know what? At the end of the day, let's face it, this is not a trade war. This is a war against China's development, against China's progress in the high-tech sector. Trump is basically trying to slow them down. And I think that's really the story. That's the agenda. It's not about a trade. It's really about slowing them down. And the implications are significant. And I think that both Trump and the Chinese know that they cannot go with a full-scale trade war because the impact on the global economy and their economies will be very significant. They will have to find a way to save face and some sort of agreement like NAFTA and in many ways like North Korea. There will be an agreement. The question is how long it will take. It probably will be longer than expected even a few weeks ago, and that's why the market is reacting the way it is. It's not good news for Canada by any stretch of the imagination. We must find some sort of a solution. Otherwise, the impact on Canada will be significant and the rest of the global economy will be very significant.
Obviously, the Bank of Canada is watching those geopolitical factors very closely. I wonder to what extent you think they're watching domestic political factors as well. As we head towards the federal election, our colleagues at Bloomberg wrote the story that says the Bank of Canada is on hiatus until the federal election. How do you think that factors into monetary policy in this country?
Well, of course, if you ask the Bank of Canada, will tell you no connection whatsoever. We're not looking at the political scene. I think that if you can help it, you don't want to really make big changes before elections, although they will never admit that that's the case. But I think that there is no reason for them to do so. So I think that if you look at the economy, data, trade, and politics is very, very, very low at the bottom of the list. So I don't think that this is a major factor for them because there is no reason for them to move anyway, so it's easy.
So if you're just joining us, some breaking news. The Bank of Canada has left interest rates unchanged for a fifth straight meeting. We're joined now by Benjamin Tal, Deputy Chief Economist at CIBC, with his reaction to the news. You alluded to this earlier, and we're looking at the Canadian dollar this morning, below 74 cents against the U.S. dollar, off about 0.2% this morning. You had alluded to some of the expectations in the market on whether we would see a rate cut in this country at any point soon. I know coming into this, Bloomberg had done some analysis more broadly speaking, which had indicated market participants perhaps seeing an 80% chance of at least one rate cut over the next 12 months. Looking at what we learned today, what does your gut tell you about whether or not we could see a rate cut in Canada over the next 12 months?
Yes, I think that the Bank of Canada today is telling us in order for us to cut interest rates, it has to be very, very bad. Something really bad has to happen. So the bar for cutting rates is now much more difficult than it was a few minutes ago. And I think that's really the goal of this communication today. All this positive news is not about raising interest rates, it's about not cutting interest rates. So I think that news will be supportive for the dollar and to an extent even supportive for the short end of the curve, because basically is very clear. I'm not cutting. Read my lips. That's exactly what he's telling you.
And yet, I'm finding the move in the Canadian dollar very curious. The fact that we are down 0.25%, given what you said, this seems to be a little bit more of an optimistic statement. And this sets Canada perhaps on a diverging path with the United States, where there is increasing pricing in of a rate cut south of the border. Would you make too much of the move that we're seeing in the Canadian dollar today?
Yeah, I think that the Canadian dollar is reacting to two things. One is China-US and the other is interest rates. I think that the market probably will undo some of this softness in the dollar soon. I think that this is an overreaction. But clearly the focus is not interest rates. The focus is China-US, which is much bigger in terms of its potential implications for the global economy in general and the Canadian dollar in particular. So I think that that's where the focus is. And to the extent that the Bank of Canada is telling you I'm not really cutting anytime soon, that's something that the market now is pricing in, so it will not be a factor anymore. But I suggest that this short-term trade, in the dollar probably they will undo it over the course of the day.
Benjamin, thank you so much for joining us with these instant insights.